Willy, mate, how are you? Are you doing well?
Hey Peter, doing great. Real busy. Just saying we go to sleep next year, not this year.
Yeah, this year. Like we make all our money this year, and then we can go into a 2-year hibernation.
Recharge,
Yeah, wow, that's if history repeats itself and we don't have the super cycle, man. So anyway, listen,
We shall see.
always good to see you. Before we get into the monthly stuff, there's something I want to talk to you about first. I just want to talk about this quant. Can't even remember the name of the company. What are they called?
Mr. Cryptoquant.
Yeah. So there's been two incidents, right? There was the Gemini incident, but there was one previously with the miner with F2 pool, right, where they made a claim that they were dumping, and now they made a claim this time. Like, did they make a bold claim, or were they just sharing data that everyone was looking at?
Look, I don't know. Like, I was shown all this F2 pool dumping data by someone on Twitter, and people asked me questions, and I looked at it and I was like, that doesn't look like the data I'm using, because I use Glassnode. Cryptoquant is a different source, right? And what you have to understand with it is a lot of it comes down to how they receive that data, whether or not they're figuring out these are the wallets that the miners own. If I have that straight. And so I didn't see any dumping from F2 pool using Glassnode, but there was a lot of dumping coming from the data that Cryptoquant was releasing. And and I think you were saying like F2 pool announced that they weren't selling, which meant like that data was erroneous. I don't know if it caused much of a market hoo-ha. A lot of people talking about this was bearish. I didn't think even if it was true, I didn't think it was very valid, because miners don't have much sell pressure next to the buying of a full bull market at full force. It's ridiculous how little miners have in terms of dumping power, unless you happen to be a miner called Satoshi or Hal Finney, and it's this accumulated years of, a decade of, decades old mining at least.
But there's something else happened this month with Gemini, right? They put out something saying that a large amount of coins have moved into Gemini, and the implication was there's a whale was moving coins and a big dump was coming, and then we saw a dump.
Yeah, so that's what I actually thought we see twice, because what happened was Cryptoquant have actually a Telegram group which they broadcast all sort of major flows in and out of the exchanges, and they broadcast to 28,300 people. That, and you can see that because it lights up with how many people have read it. That $1 billion had flown into Gemini, and they warned of essentially $1 billion of money was coming in. Beware of dumping, which on the first account it's quite ridiculous, because Gemini doesn't have the liquidity to sell off $1 billion, so it's immediately suspicious. And I immediately asked Glassnode CTO to double check on that, and they said because they didn't actually show that on their data, and so it turned out to be just later it was found out to be BlockFi's wallet, and there was a lot of hoo-ha. I think that they were saying they turned it from whales dumping, which was the initial alert, to no, this is definitely a external party depositing into Gemini, and they made that the debate rather than that warning, which I thought was quite disingenuous, trying to change the goalpost of the conversation to protect their reputation. The outcome was that it was an external deposit, meaning it was BlockFi depositing into Gemini as a custody provider, but that's certainly not the picture of a whale dumping. That's actually a bullish incident that a lot more coins have been scooped up under custody by BlockFi and being put into Gemini's custody solution. So, yeah, what then happened was you saw this immediate sell down from the minutes that alert went out. $3 billion of long contracts got sold down over the next few hours, and then eventually 450 million contracts were liquidated. So traders were wrecked to the value of almost $500 million. And then that was the last top we had. That happened right at the very top of the market. So we had this wind down. It took a lot of the buying momentum out of the market. It scared a lot of people off. The thing with it was, and I didn't call this out on the prior time it happened. It was the second time it happened. There was a similar event at the last top. That was just over a month ago. I think I'd have to look at the chart. I think it was, what was it? The 40. Yeah, there was a $58,000 top. It was after Tesla announced they were buying. There was this huge FOMO, and then there was another $1 billion movement. I think it was even more, $1 to $2 billion movement, which was erroneous. And that did the similar amount of sell-off, roughly $3 billion again, and $500 million liquidation. And then we saw on-chain everything went slightly bearish before it recovered. So second time in a row, and yeah, it was an interesting drama.
When let me ask you something. So when those liquidation events happen, and a billion or a couple of billion is wiped out from traders, who's picking up those coins when they're being wiped out? Is that the exchange themselves? Or they the market? But I don't understand this. Yeah, so when they're forced into, when they're forced into a stop loss kicks in or something.
Yeah, so these contracts are constantly when you're in a long contract, someone else is taking the other side of the trade. You're not actually buying the underlying asset, which is Bitcoin. So when you actually buy a long contract, you're just buying a bet that the price is going to go up. And then someone's taking the other side of it. And so, in the Bitcoin market, you might ask, well, everything's going hyper bullish. Why would anyone take the other side of it? And the answer is that you may be like based on a US dollar benchmark as a fund. And you might want to generate maybe a high yield on your US dollar capital. So what you do is you buy the Bitcoin, and then you'd sell the short contract in the futures market. And because there's such a high premium with that, you get a high return. You might get 20% per annum doing that. So all these traders are in these long positions, they were selling down those long positions. So that does have an impact on the market. Those contracts, when they're selling, they kind of work like a real sell, because when I sell down a contract, that sell arbitrages across to spot markets. So it does look like actual real downward sell pressure on the real underlying spot markets.
Okay, so but basically, based on this data that went out on this, did you say a Telegram group, the 28,000? Essentially, you can kind of point at that. I mean, I guess you can't say it definitely is, but it's highly likely.
It's highly likely because it happened within 30 to 60 seconds. There was an immediate dip down, and then there was a second wave of sell down, and that was the real one.
But some traders must have lost a lot of money.
Yeah, a lot of traders got wrecked, $500 million of liquidations. And I don't know if some of them might have sold out at a profit because it had been, the price had been ripping upwards for days and days. But there were definitely a lot of losers in that sell down, $500 million worth.
What can and should be done about this, though? Should they come with a warning label? Is their reputation at a point where people shouldn't trust them? Because strictly speaking, if they have that much kind of influence, Nate, they themselves can short the market before they release certain bits of information.
I totally imagine is subject to, I don't know if regulators have an eye on that stuff. Certainly, if you're in a position of information asymmetry, like CEO of a company, you can't just broadcast stuff out. I don't know, because this is an emerging industry. I'd hate for it to be regulated. It's global. I think it's just what's transpired, which is the community coming together and calling out errors, making people accountable. Like, we didn't see anyone calling the first issue out, where the 58,000 top a month ago, and we also had the same issue. I mean, I didn't call it out. I just wrote about it in my letter. But on a second time, I did announce it. I didn't really name names too much, but the Cryptoquant went into defense mode and tried to make it look like they were right and made a game out of it. And I thought it was prudent to actually just break it down and say exactly what happened. I mean, they're a new venture. I think they're doing relatively good work, and it adds to the ecosystem. I just think that we've got to keep each other honest. I expect to be called out if I do bad work. I expect Glassnode to be called out. Everyone's got to be careful that they're checking what they're doing and being responsible. So, it's along the lines of Masari. They're doing a lot of data on the industry, and it's sort of self-policing. Let the industry police itself.
All right, that's fair. Okay, so anyway, since we did last speak, we did get up to 62. I thought we were going to go higher. I don't know why. I probably think that every time it runs up. We're now seeing a little bit of pain right now. You're pretty good at knowing what the bottom is before we rip again. Where are you seeing the potential bottom in this? Like, do you think we'll go below 50? Should we?
I think we're at the bottom now.
Right.
I mean, I was just checking earlier today, and I was looking at the on-chain flows, and it tends to do a particular signature where it just zeroes out, and then flows coming into the network start to accelerate away while the price is still dropping. And we got that for the second day in a row today. Meanwhile, we had today the largest outflow, like Bitcoin being scooped up off the exchanges and moved into cold storage, like the highest we've seen this year.
Wow.
So I'm pretty confident we're within. I think this is the bottom, if it's not within 48 hours of the bottom. And so, yeah, I'm stacking up my long positions right now, personally. But yeah, I think we're pretty close. And through this entire downward move, you can see from the price action and the way in which it's trading on Coinbase, there's consistent buying, and consistent outflows going into cold storage. So that's a signature to me as a maybe an unannounced institution that's buying. Maybe it's a private hedge fund, or many of them, but there's certainly a lot of buying going on from Coinbase, which tends to be US institutions. And by the way, those coins moving out, they're moving to participants that have no history of selling. So either they are new, they're brand new wallets, and they're just in accumulation mode, or they're existing holders that are continually adding to their stack of coins that they're not selling.
So how does that work then, Willy? Because if you're seeing consistent inflows, consistent buying, yet the price is dropping, what is actually going on here? Is it like what is at play here that's pushing the price down? If we've got all these new people coming in and buying.
Well, the way I look at it is that there's a price floor on Bitcoin based on the amount of capital that's coming in and held by long-term investors. And that price floor is not the price that you see on the chart. There's a price floor which is supported by these long-term guys, which I do a lot of modeling around to try and figure out what that is. And then we'll see the speculative price that moves above the floor, and that's influenced by short-term participants, short-term traders that are buying the Bitcoins, or now we've got the futures exchanges which do much higher volume, and they're buying these long contracts or short contracts, and so that price that we actually see on the price chart can float way above the floor or even drop below it in massive scares like the COVID event. I have got a particular model that I use, and it seems to work very, very accurately. And whenever we hit the tops, which we've done twice in this main bull run, it's about 33% above the floor. We got pretty close. We got to 28%, I think, before that false alert we got. I kind of expected us to rip up to the 33 again. It was definitely had the momentum, but then they took the momentum out, and so there's plenty of room to drop. It's currently around the 15 to 18%, which is about right inside a bull market, using that indicator. So there's certainly speculative, yo-yo, springy movement above the floor to go, especially if we're high above it.
Are you talking about the Rick Astleys here as well?
Yeah, that's the strong holder thing. I was talking about the Rick Astleys, which what Glassnode do is they break all the wallets up that's visible. They bring them together into clusters. Each cluster is like what looks like one person. And then you can sort of look at their history and go, well, this cohort are very speculative. You see coins coming in and out of their wallets. And so they're not really holders. They're in it to trade speculatively. Then you have the middle ground where they're stronger holders. They buy more than they sell. And then you've got the Rick Astleys of this world, which are highly illiquid. They just buy, and very seldom do you see flows coming out of their wallets. And so one of the metrics that you can draw with that is to see how much of the coins flow into Rick Astley, because that dude's never going to sell or let you down, right?
I fucking love that, man. I love that.
So whenever you see flows,
he's a national treasure here. You do realize that.
It was like 1987 was it was a good song. 2021, it's the national anthem of the universe.
We love him here. He's an absolute national treasure. If you're listening, Rick Astley, we love you. All right, man. Well, listen, look. So you're saying, as you said, well, you are saying, I know you're saying it's crazy. I saw on your Twitter, you would be crazy to sell right now.
You'd be crazy to sell right now because, there's more buying the dip than ever seen before. A new record for 2021, and we know the person that's buying the dip is Rick Astley, and he's not going to let us down.
He's got big diamond hands. All right, man. But look, also so much fucking bullish news, right? Again, I mean, the thing about it's pretty clear that Elon Musk is going pretty big with Bitcoin. We've had did Fidelity have applied for an ETF? But I mean, everyone has. We're confident there's going to be more.
I think there's 39 ETFs in the pipeline right now.
Yeah, I know, dude. And then when they hit, it's going to be that's where we might see one of those massive jumps. We've also got Morgan Stanley opening up to their customers as well, to their wealthy customers. So there's a lot of good stuff happening, and fundamentally, it feels like a really strong place.
Yeah, it feels really strong. I love it that Tesla decided that they were going to stack sats by selling one car at a time.
I know. Somebody said they've turned their production factories into a way. They're basically mining Bitcoin with cars.
Exactly. It's a new way of doing it. I love it. And I love it how they built their payment system using their own node, full crypto, nothing goes through banks. It's just buy the car into their wallet.
It's so fucking badass they've done that. I was I was chatting to my producer the other morning. I was thinking, well, look, how can someone like Tim Cook and other CEOs must be looking at that and going, hold on a second, why are they doing this and why are we not doing this? Like, why?
Yeah, there's really no excuse, right? Apple's a tech company.
Yeah.
It's a tech company. I guess I do remember the early days, they did not allow Bitcoin wallets on the iOS platform. I remember that. Do you remember that?
Yeah, I do.
They're a bit slow with the Bitcoin stuff.
They got them there now, man. They got them there now. All right, so I'm going to pull something I saw on your Twitter. Whales are becoming dolphin sharks. New buyers coming in. Cohort is still accumulating. They usually sell in the middle of the bull run. Still bullish. So the question I really have is, structurally, is this just playing out the same as previous cycles? Or is there anything happening this time that's different where you're like, maybe something different is happening?
Yeah, so it's completely different. I mean, everyone's talking about, the war templating onto 2013, 2017. And I think we have to be aware of the different, the different participants we have. And the big one, of course, which we all know, is institutions. And so we have to account for that, and I think that's what we're seeing right now. Institutions as a menagerie. You've got the Michael Saylors and the Teslas, which are corporate treasuries that are stacking, but then you've got, the Ruffers of this world. They're really macro funds that are they're using Bitcoin as part of their portfolio, and they're going to take profits. And Ruffer took profits way back after they had, what was it, a 3x or a 5x?
Something like that.
Yeah, something like that.
They took out the original investment.
Yeah, totally. They got pressure from their investors, and they said, shouldn't you rebalance? So they rebalanced so they could hold the rest without, a lot of backlash from their investors, because it's free now. And we've just run into this March period, end of quarter, and you can see the steep drop as we approach into it. So my guess, looking at that, is that we've got this end of quarter rebalancing, bearing in mind if they got in from the last quarter, they've done effectively a 6x, a 3x to a 6x, depending on where you entered. And so if you're a macro fund, you probably want to rebalance. You probably have directives to rebalance because you don't want to contain, their directives is to mitigate risk. So they will probably have to sell their winners to buy more losers. And and you see that with the whale balances, that is definitely dropping. But you see the next tier down, the dolphins and the sharks, which is 100 to 1,000 Bitcoins in their wallets. That's growing to take it up. And so if you sum the two together, you get this chart, and it shows that this entire cohort, whether the whales becoming dolphins or sharks or whatever, and the guys underneath them, overall, there's an accumulation, and that is still continuing to climb. Anyone holding 100 to 10,000 Bitcoins, that cohort, they're, as a group, continuing to add to their Bitcoin. And typically, and I don't know if I can continue to template this, but in the last two bull cycles, this cohort started to sell down by the middle of the main bull run. And they're not selling down yet. So if it holds true this time, yet to see, then we're not halfway yet, which kind of makes sense. It's only the first quarter of the bull year that we have. One every 4 years is a bull year. So
it's a bit longer than that, though, really, when you think about it, because the bull run starts from the bottom, essentially. So the bull run has really been going for about a year now. Like, what for you? What signifies the bull? I think the bull run starts from whenever the bottom was.
Yeah. Okay. So that's what I'd say as well. So if I want to break that down and be more specific, we only really have a really hard 1 year of bear market. And then we start the bull phase. We typically have 3 years of bullishness to 1 year of bearishness. But then you got the first part of the bull run is the accumulation bottom, which can last 6 months, 3 months, even 9 months. Then you have the early phase, which is, it sort of pumps up, gets everyone excited, and then that sort of dies down a bit. And then there's a reaccumulation, and then you have the real what I call the main bull phase, which is that it's usually played out in 1 year. 2017 was the last one. 2013 was the one before that. 2021 is the main bull phase of the bull market. So that final explosive bull run, the 1 year out of the 3 years of bullishness is happening now, like the crazy bullishness where grandma's going to tell me to buy Bitcoin by the end of it.
Well, but the thing is that there's something everyone wants to know with it. And this is where it gets tricky, whereas like, if everyone is completely aware of the cycles, they're like, okay, so it means the cycle's going to end around December, January. What is the top? You want to be the person who's essentially in this cycle who sold at 1100 in 13 and sold at 19 and a half. You want to be that person. And is that like, there's such a range of numbers. I've seen you've looking at the like the macro cycle. You've raised your top from 250 to 300, right?
It's gone up. I don't. I have a model, and the model spits out this number, and the model keeps moving. So I'm in that nice place where I don't have to be right or wrong. Just the model has to be right, and it keeps changing trajectory upwards. So it was sort of ballparking 200 to 300,000 if you assume the end is in December. Yeah. And now it looks like 300 minimum is the trajectory. So, they can go further up, or it can go down a bit if we have. It just depends on how the price action swings over the rest of this year. So,
how do you play it though, Willy, with yourself? Are you looking for that to think, right, I'm gonna unload a certain percentage of my position at that point, or do you scale up and scale down? Like, are you scaling out over a period of time? And maybe this is too much information because like you're happy to share data, but you clearly want to front run everyone else. Like, but generally speaking, do you just not care and you'll hold like me?
I don't think I'm a big enough fish to really care about front running anyone. I'm navigating this quarter by quarter. I'm aware that we may have a super cycle. I have no strong opinions about it. It's possible. But there's a lot of leverage in the system, so we could crash down a lot as well, I think. So I'm not going to scale out like you see those dolphins and whales doing. That's a pattern of, I think, very wealthy participants that aren't trying to time the markets. They look very, wise. Investors that don't play too much of the timing game, and they scale out. You can see that anyone with 100 Bitcoins or above, they're tending to scale out 6 months before the top because they don't know exactly when it is. I'm planning to start to look at that around within 3 months of the top. I'll start to have a closer look at it. The last few weeks to the top is just ridiculously fast. Like, what was it? Did we go? Do you remember, Peter? Was it 2 weeks from $10,000 to $20,000, or?
Yeah, it was even more, wasn't it? Like 2 weeks from like 6,000 to. Yeah, I get up here. There we go.
Yeah, it was. I just remember it was just so euphoric.
Okay, so we hit 4.5. We peaked around 4.6, 4.8 in August. So that's and then we peaked on December, so September. So we went from 4.5 to 20 in. Well, let me just.
Yeah, wow. So kind of like a 4x. If you scale out too early, you miss out on the last 4x.
But strictly speaking, we went from, so we hit 7.4 October 30th, and then on and then on November the 6th, we dropped down to below 6. Yeah, so it's that November the 6th we went from 6 just under 6,000 to, I mean, I'm looking at the candles here, but we went, so it's 6 weeks. We essentially went from 6.
Yeah, I got the chart up now, right? The final month we went from $6,000, roughly 6,000 to 20, right? And so that's like, we did a 3x in 1 month. And then if you go for the quarter, we did a 5x, essentially a 5x over that final quarter. So, like, I don't want to scale out too early, and we're not even close to that part of the market yet. So my strategy last time was actually not to sell. I was not to sell in leading up to the top. It was more that I would wait for the top to start to signal, and then I would sell on the downward run. If you're a whale, and maybe a Michael Saylor size whale, like maybe you've got maybe not even 100,000 Bitcoins, but maybe you've got just a paltry 10,000 Bitcoins, you might have trouble selling in the downside of the market because the liquidity starts to dry up on the way down. But for ordinary people that have got under, say, 1,000 Bitcoins, I think it's perfectly fine. There's sufficient liquidity in Bitcoin to exit the market on the way down. You could even hedge your way out by selling the short instruments and then dumping the rest on spot markets. And so you could, the futures markets are always going to be like something like 5 times to 10 times more liquid than the spot market. So you can actually hedge out before you actually get the sale on the underlying if you've got a lot of Bitcoins.
But how do you do that? When you say hedge out, someone like me, I've only ever bought spot, right? All I've ever done, and I've gone onto an exchange, I've bought it, and then I've removed it. I've never really used leverage.
So essentially using the futures market for what it was designed for, the future, right? I'm going to, if I've got, say, 100 Bitcoins to sell, maybe I would just sell 100 short contracts on Bitcoin right now. Say Bitcoin's at $300,000, I'll sell 100 short contracts, 100 Bitcoins, and that'll fill almost within minutes. Okay, and so you've essentially locked in the price, the sell price of your Bitcoins for the future. And so if the price starts to drop away on you, it doesn't matter because, like, say you're selling, it's dropped down to 250,000. You can still sell your real Bitcoin on, say, Kraken or Gemini or Coinbase at 250,000. And great, you didn't sell at 300,000, you sold at 250, but your short contract, which you sold at 300, is now going to make up the difference for that $50,000 that you didn't quite get at the 300 mark. So as the price drops away, you've already locked in the price. So whatever you sell it at, that short contract will make up the difference. So once you've sold the underlying, then you can exit that short contract, and it'll compensate you for the difference.
Well, who's the loser in that scenario, though? Who's losing out? Because if that's a perfect trade, somebody must be losing out here.
Oh, probably someone who's going DGN long at the top. Or it could be the opposite. It could be the exact opposite, where someone is providing a kind of a market neutral. It depends on how the funding rates work. If there's a demand for short contracts, then someone's going to take the long contract on that. And what would they have to have if they have a long contract? But they'll be able to provide the other side because the funding compensates them, I believe.
When you're creating those short contracts, like, are you just when you feel like you're at the top, when you feel like it's a bit toppy, you just do it at that point?
Yeah, I'm constantly trading the futures because that's my that's how I trade the markets because they're so liquid. But so I'll just load on. I'll load on just recently I had a house to sell, and I made the decision to sell the house. I made the decision to sell the house in December, and I knew Bitcoin was going to rip, and so I bought the hedging contract, which is a long position on for the sale price of the house. And when I finally sold the house, which was just a few weeks ago in March, and the funds finally came through, I effectively locked in the price at, whatever, $23,000. And so, and ultimately all I did was I added a few more long contracts which was the sale price of the house, into my normal trader account. And at the top, it'll be the similar. I'll just load on some short accounts, some short contracts. And because it's very fluid. It's very fluid because I'm an active trader. But yeah, it's just essentially, for the non-Americans listening to this, you open up an account at one of the futures exchanges, either Kraken, if I think they're spinning that up pretty soon because they're regulated. You have to be institutional if you want to do the CME. But then you've got FTX, which is my favorite for it. Binance offer this, all the futures exchanges, really.
Well, I'm going to ask you some basic questions. I always get this now. Every time I do a show, people write to me and say, thank you for asking the questions that I want to ask. But there are some bits I'm just unsure about. Okay, bear in mind, I've only ever traded spot. But what I'm going to do, just out of interest, between now and the next show, I'm going to go somewhere and do my first ever create my first ever futures contract. Okay, I'm going to do my first ever futures trade. But talk me through a very basic futures trade that I might make now. So, for example, if I believe right now today that we are round about, near the bottom, and I think April we might go above 70k, what kind of contract would I be creating?
If you're, I can tell when you say I think it's going to be above a particular price at a particular time. That tends to be more of an options contract where you win a lot once you get above a price, and if it doesn't reach it, the contract's not worth anything. What we're doing is a futures contract, which is it's essentially just tracks the price of Bitcoin, So if I think it's going to go up, I buy a long position, and the price of the contract will go up and track Bitcoin, And the same if I sell it, it's going to track Bitcoin. So what I essentially am going to do is I'm going to front some collateral. So I might put 1 Bitcoin in my trade account.
Mm-hmm.
And then I can buy 1 Bitcoin of long contracts, So it's effectively synthetic Bitcoin.
Oh, is it like a CFD?
It's kind of like that. It just works. The contract's slightly designed different. And I'm not an expert at CFD, so don't ask me to dig into that. But the futures thing is just I'm buying a contract, and it'll track the price of Bitcoin. And one of the things that we have in the Bitcoin world is the invention of the perpetual swap contract. And that's just fanciness for a futures contract that doesn't expire. So that's what most people trade in Bitcoin. So it actually just tracks Bitcoin very closely. And then you pay a funding rate to be in that position. Or like if everyone's going long, then it's going to be expensive for you to stay in that long position. But if you want to go short while everyone's going long, you actually get paid funding by the other people on the other side of that contract. So it's demand and supply based for the cost of being in that contract. But yeah, once you're in that contract, you simply bought a kind of a synthetic Bitcoin, and it's backed by your collateral. Just like a BlockFi loan, actually. So if it swings against you to a point that you're so far underwater, it's essentially like the bank bull closing on your house. You will get liquidated. If you bought Bitcoin at a particular price and your lost position from when you entered is greater than your collateral, then your collateral will be sold down to pay off those losses, and you're out of the trade.
Right. So the risk on the futures is that it goes in the wrong direction and you're forced out of it. So on a future. So like, for example, so if I go long and suddenly we start crashing down, Do I have what, like a margin call?
Yeah, that's exactly that. A liquidation is a margin call. So,
Yeah.
and so that's the difference. If you're buying Bitcoin hodling, you cannot ever get liquidated, right? Bitcoin price will drop down, but you won't. No one can take those Bitcoins off you. They're just worth a little less. But when you buy that synthetic futures contract, and you're buying, you've got one Bitcoin and you want to buy two, but you can't afford it, so you front your one Bitcoin as collateral, and then you buy an extra Bitcoin as a synthetic Bitcoin, the futures contract, the long contract. And if that price drops to, say, half, because, 1-to-1 drops to half, you've effectively lost the one Bitcoin of collateral.
Okay, that makes sense.
So, you would have heard that, in Bitcoin, you can have a 100x leverage. So you could buy 100 Bitcoins from your one Bitcoin collateral. So that means that if the price of Bitcoin drops by 1%, you're liquidated. If it goes up by 1%, you've done pretty well. You've made a Bitcoin. People like to do this sort of directional trade where, I can, with a 100x long position, if it drops against me, if it drops below 1%, I'm out of the trade. But if it goes up, say, and maybe it goes up 10%, it's like a casino with a lot of payoff. So a lot of people put it in small amounts and do these kind of directional bets that look more like a jackpot coming out of a casino, and that's very popular.
Can you sit there like with your finger on the trigger, and when it suddenly looks like it suddenly just starts to shoot up, you quickly do it?
You could try that, yeah. People get quite tricky with the trades. Wait for the setup, look like it's just about to break, and then that's where you enter. You set your sort of liquidation level at a point where it's below what the supporting price will happen, where what it looks like on the chart. So, that's the typical trade. I don't do that kind of trading. I'm a macro trader. I think you probably would be too.
Mm-hmm.
I look for really good setups which is all of 2021, and I go very low leverage, and I have very good models around how low the price can go before we hit that price floor. I also know that in COVID, it demonstrated that we could drop maybe 50 to 60% below the current price. So, that generally means that I'm at 1x leverage maximum, maybe 0.8 leverage. That means I'll survive a black swan event.
Right. Okay. Because I tell you what I did. I think I mentioned it last month to you. I opened up an account with plus 500, and I thought, because historically I'm not a trader and I'm not going to trade. I'd rather stack sats and not lose some of my Bitcoin. But I thought, maybe there's just some very obvious trades I should be making. So I thought I chucked in it's about £2,000, like $2,500, $3,000, and I've one simple trade that I make. It's really simple. When there's a big dip, like there is now, I buy, and I've done that 3 times since the start of the year, and I've doubled my money. And all I've done is run it, see that big dip, let it go just over the previous high, 10% over the previous high, sold, and then waited for the next one, and I've doubled my money.
I thought you didn't trade.
Well, I did that because I was like, where I would make the mistake is that if I become a trader, I will feel like I have to constantly make trades, and that's not me. I don't have the time. I've got no interest in that. But every time there's a 25%-ish dip in a bull run, it just seems to be crazy not to try that. So I just thought, I'm going to spend 4 years only doing very, very obvious trades, right? And that's really obvious to me. And look, it's play money as well. It's a couple of grand. It's nothing. Right? But I just wanted to see.
You've just outperformed 90% of traders out there, probably 95% within the futures market of Bitcoin.
Yeah, because I think these people are trying to trade all the time. They feel like they've constantly got to make a trade. And the problem I'm doing that with Bitcoin is you just got no fucking idea where it's going. But what I do feel is I have a good gut, like when it's done a good 25% drop, and when it feels like that's bottomed at that, and I put in a stop loss where it something like 30, I think it's about 37%, because I just don't think it will hit that. right?
That's really prudent. Like it's taken me a long, long time. I've been trading 6 years now. Well, trading crypto for 6 years, I should say. And it's taken me a long, long time to figure out how to trade crypto my way. Because everyone was telling me risk management, risk management, risk management, which meant type stop losses. And the crypto is a weird market, particularly when BitMEX was very prominent. Like everyone would hunt your stop losses and take you out of the trade. But like, it took me a long time to figure out that that system's work. That system only really is designed for this scenario where you're openly admitting you don't know which direction the trade's going in. The price could go up or down. If it goes down, I mitigate my loss. If it goes up, I win. I capture it. And you just keep doing that. You can lose more trades than you win, but your winners take the money home. But that is really these very small time cycle trades in the hourly sort of minutes, hours, within a day, even a few days. And then I realized, like, actually, we've got this open ledger, right? We've got all these on-chain analytics, and we can literally see the demand and supply on the network, and it's very reliable. Like generally 90% of the time, the call is correct. 10% of the time, it's wrong, and when it swings, it's slow in reacting. You see that it's swinging the other way and the structure changes. So if the forecast can be done with 90% reliability, why would I put in stops to be kicked out of the trade? Which was, because if you're doing this trade, it's over weeks and weeks and weeks, and you're on the screen all the time. So, I developed a system similar. Actually, you're similar because you got a very wide stop. I don't use stops at all because this is a very different way of trading, and it's very low leverage. It's long only because we're in a bull market, and then I take the profit once the structure starts to not get so bullish, and we consolidate, and then I'll do it again. So not many trades, and it's a different way of doing it.
I estimate it would be about 6 for me this year. Let me go and have a look at my closed position. So here we are. I've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I've done 11, and 1, 2, 3, 4, 5, 7 are in profit. And the only reason, so 3 of them were bad that went negative, but the only reason is it wasn't a stop loss hit. What happens is they have a expiration on these CFDs. So you open it, and it stays open for a week, and then they close it. I mean, it's not a great place for trading. I could probably find better places. But the point being is it's consistently worked. And I'm like, I'm going to do this all year, and then I'm just going to forget about it. I don't know if I would do the same next year. So if we went into a bear market, I don't know if I would short the tops, because I feel like it's a different game trying to do the reverse. Like you've got unlimited upside, right? But on the shorts, you haven't. So I'm kind of like, I'm not sure if I'm gonna do that.
Yeah, I think that like my view of what to do with the tops is to take it all out. Well, not all out, but to take a certain amount out into US dollar benchmark and put that into some sort of yielding thing within crypto. Whether or not it will be DeFi or whether or not it will be just a basket of high yielding kind of arbitrage funds. They tend to do well on the downside. They can produce higher yields than it would be in a bank. And I kind of trust crypto more these days than having money in a bank. So, I mean, you and I both have had frustrations with banking, and I just don't feel like I ever want to be part of that that system again. Are
you going Bitcoin Maxi? Are you going to be your own bank?
Yeah, well, like sure, I pay with credit card and this and that, but like I mean, for wealth management, I'm over owning houses. I'm over having money sitting in banks and doing whatever. Let's just as a wealth vehicle. I think I want to hold it all in crypto. We've got really good stuff, right? We've got Bitcoin. We've got all manner of high yield avenues of like you could chuck it into DeFi. That's not a maxi thing to say. You can chuck it in DeFi and yield on USDC.
People keep trying to sell me that stuff.
I'm not trying to sell you that.
No. Other people are. That's my problem. Is I just don't understand it. Like my problem with DeFi isn't fun. Like I don't have a fundamental objection to it long term. Right? I'm not such a maxi. I'm like it's all shit. It's all. I don't care if Ethereum can't scale over the next 5 to 10 years. Like if it can't, it can't. But at the moment, it works. Right? You can use it. And if I felt like I could put some dollars in there and yield, I wouldn't be opposed to doing that. Like I don't have that kind of fundamental maxi issue. My issue is I don't know enough about it to trust it. I've just seen too many things of rug pulls and exits and I'm just like I just don't have the time to learn it. Like learning Bitcoin alone is enough.
Yeah, I'm with you with that. I don't actually, I haven't had enough time to go deep down with it, but I know that I don't trust what's out there right now. There's been enough smart contract bugs and hacks on those contracts. So I feel like I need to know deeply what I'm putting it into, and I still don't even trust anything written on the Ethereum ecosystem. But I think things might change by fourth quarter. And there's a lot of different offerings, and it's not when we say DeFi, I can look at the whole of the crypto industry as DeFi, right? And so there's a lot of developments. So I'll revisit when I really need to maybe use some of that stuff next year while we need to be on USD benchmark if we have a bear market.
Yeah. Also, like one of the other things I don't understand where the yield's coming from. Like somebody was saying to me today on Twitter, you'll use BlockFi for your 2% interest, but you won't put it on Vespa, whereby you can wrap your Bitcoin and earn 30%. I'm like, firstly, wrapping my Bitcoin scares the shit out of me because I just don't understand it. And like, I also don't know where's that 30% yield coming from. I don't understand it. Is that yield coming from other traders who are borrowing to trade at leverage? Is that where it's coming from? I just don't know.
I think it's really different. I'm no expert, but I think a lot of that yield is coming from there's many categories. On the bottom of the rung is the Ponzi yield, where you mint new coins and you're getting yield in these tokens that are being printed, and incentivizing you to provide liquidity by locking your coins up to, provide liquidity into these exchanges like Uniswap, so that this new coin being minted in existence can actually trade. But then you've got other things like more interesting things like leverage trading on DeFi networks. So I think that I haven't looked into it too deeply, but it just kind of makes sense, right? You've got to be incentivized to provide the other side of the trade. Maybe if it's more of a margin trading system where you're loaning your Bitcoins out or your whatever coins out for other people to borrow it and trade on leverage, you'll be paid a return, right? So that's more legit as long as those contracts are solid and there's enough liquidity. I think, like that. That's the kind of stuff I like. Because who wouldn't want to be able to say, for example, I would just love to know, we're in a bull market. Let me put, instead of this tiny amount, 5, 10, 15, 20% of my portfolio into a trade account and leverage that to try and get more gains in a bull market. I'd love to be able to put like 30 to 50% of my whole portfolio into a DEX, which is private key secured. The exchange can't get shut down or hacked or just sheer exit scam run away with my money. It's now on a decentralized network that I hold those funds via private key. We've probably got a long way to go to get there because, all sorts of, centralized parties exist in these networks still, and the security of it is probably early days.
Well, listen, two quick things before we finish. Just finally on that futures thing. So that idea you take out a short contract at the top, you've kind of got to be at the top, right? Because if you take out that futures short contract and you think it's the top, so there's a difference. Say it was 2017. If you thought the top was in and you took that contract out at 8,000, somebody go to 20,000, you're in problems. So you've got to know it's on the way down. Like, but how do you know?
Well, no, not really. Because that was the hedging out way, where you'd only do this if you're like a whale, thousands of bitcoins, and the liquidity in the market's not enough. Because you've actually got the underlying Bitcoin, so if it's ripping, it's fine. It's equivalent of selling your bitcoins lower down and scaling out. So that's more just hedging out. But, on that point, I think a lot of people focus too much on selling out before the top, thinking the top is Armageddon. But actually, there's a lot of value in scaling out after you've got full confirmation of the move is now bearish.
Right. Okay.
And I think, yeah, I exited near the top of 2017 it topped in 2018. You remember it hovered quite high for a while, and by high I mean 15 to 20, 14 to 20, something like that. That's still really high when you think the bottom is it went to 3.2.
I think I get. So what you're saying, it really is like, on the way up, you don't know where the top is. So you might scale out 6, 7, and suddenly it rips up to 20. But once it's ripped to 20 and dropped, you kind of know. So you can start scaling out at maybe 14, 15. Like, you don't have to catch the top.
Right. See, yeah, exactly. Your level of confidence starts to rise. And it's much better to move your large capital once you're very confident. And that happens after the top. No one knows it's the top until afterwards, really. Anyone else that says so is probably lying or drunk their own Kool-Aid. So, now after seeing a 2017 top before the data streaming coming in on hindsight, I can go, I think I can have high probability to pick the top rough timing, but still, there was a lot of false starts in 2017 tops. A lot of people thought 10,000 was the end of the line, and we doubled in like 1 week. So, I actually, what I did was I had a plan. I planned that when the top happens, typically what a top does is it does a dead cat bounce and it drops down very sharply, and then it bounces up towards, around 80% of its prior top. And the key is to know, once the top happens, you want to know, is this whipsaw a consolidation and just another sort of settling down before it does the next step move up? And by then, I had NVT, which was one of the first on-chain signaling, and that just dropped like a rock. And you could see that investors were not coming in. There was no churn between investors, and actually it was well overvalued to the amount of activity that was happening between investors. And that was like near 100% reliable that this was the top. And so, that was, I sold out not at the top, but, afterwards I scaled out, and that was high reliability. Yeah.
Well, I'll tell you what you could do is when you've made that decision, you can quickly drop me a text, and then we'll let everyone know 24 hours later.
Sure, you must be a super whale to be able to need that front running.
No, I'm not a super whale.
I'll tell everyone if I see a top, and I'll tell everyone it's a top, it'll most likely go up even higher. I've noticed that a lot lately.
That's typical, man. That's typical. The last thing is probably a quick thing. So we had this tweet from Elon Musk that came out. So things were looking a little bit bearish, like a little bit crap. We had this tweet from Elon Musk about accepting Bitcoin. We suddenly ran up and came back down. I've noticed that a couple of times. Is that because the actual real demand isn't changing in that moment? It's just an instant reaction from traders who have actually got liquid Bitcoin. It doesn't.
Yeah,
you're not actually seeing because it takes time to get money on exchange, and so like it's what's going on there.
Yeah, it's only the traders that can react quickly. You know, reacted within seconds, just like the the whale alert that was false. It reacted within seconds. So it's certainly not investors buying in within seconds. It's absolute front running by the hyenas that are traders. They will jump on and they'll buy up those long contracts and pay the funding for it and run the price speculatively much higher in anticipation of the investors to going, well, I'm going to buy this, and they're buying at a much higher price, and then they're going to, they'll sell the contracts.
Cheeky fuckers.
So that's what happened. It got speculatively run up, and then they sold out, and then it was interesting. It dumped very hard, and it was weird. It was really weird because as it was being bought up, it was Asia that was buying, and it was Coinbase that was selling. So that's unusual. So. Because throughout this entire first quarter, we've seen this really unusual activity where Asia has typically been a buyer and the US a seller. But lately, or the West, I should say, that includes Europe. Lately, the West has been buying, no doubt from institutions, but just constant selling by Asia. And in the Elon pump, it was the opposite. Asia was speculating on it.
Interesting. Well, listen, I'm learning loads from you, Willy. Honestly, I'm learning loads, and I'm feeling a little bit more confident just doing some basic trades. And I'm going to keep doing it this year, and I'll keep tracking my progress. Anyone listening, I will say, look, just go and subscribe to Willy's email. It's like $50 a month. I had to actually resubscribe this month because my banking difficulties. I had to switch my card over. But it's like $50 a month. It's the best $50 you'll spend. Anything to do with Bitcoin, you'll learn so much for it. Like, I will shill the shit out of Willy's email. So go sign up. That's in the show notes. Tell them where it is, though, Willy. Where actually is it?
You can go to my Twitter profile, Woonomic. If it's not been banned by Twitter, it's up. And
we didn't even talk about that, dude. We didn't talk about that. You're like yours and Plan B's temporary ban.
Yeah. I think old Jack over there decided to finally clean up the crypto scamming. So they went on high alert, and I think they set up a whole bunch of algorithms to filter out scammers. And of course, it turns out I'm a scammer. So is Plan B, and so were a number. I think there was 6 high-profile crypto accounts that were shut down very quickly. And I got an apology email from Twitter saying we accidentally shut you down because of this new software that flagged you as being a scam, essentially. And I think what was happening was that people were reporting me by accident because there were so many Woonomic scammers. And
I'm like, I can't put a tweet out. I put a tweet out and then my notifications are wrecked. It's just hundreds. Oh, it's doing my head. And we're getting these weird ones now. I'm getting these weird ones too, but these ones where like they're all sending, it's almost like they've plugged in a book and they're all sending a paragraph from a book. So that's really annoying. And then the last couple of days has been this Binance video that people are trying to get you to go do. It's just, and I block every single one. And it just carries on. It's just like
it's a tidal wave. You just like it's just gonna waste your time trying to block all that.
Fuck off! Come on, Twitter. All right, Willy. Well, listen, loved this. Great to catch up. We will speak again in a month. Hopefully, Bitcoin will be higher. Are you going to Miami?
Miami? No, I'm not going to Miami. What's on in Miami?
In June, we've got Bitcoin 2021.
Oh, yeah. No, I can't go. I've got family commitments over here, as you know.
As I know, yeah. All right, man. That's fair.
Yeah. But maybe tail end of this year, I'll get moving again and see some of the Bitcoin world in person.
Yes, man. I look forward to that. All right. Have a good month, Willy. And I'll see you at the end of April.
Okay. Have a good one.